So we're live streaming on YouTube?
Yeah.
Okay.
Yeah.
Hello, all one of you.
Well, again, what I'll do is well, it'll be up on YouTube if you want to grab it.
Right.
Right.
Okay.
Yeah, but then also when we get the real audio file, you know to get that
Yeah.
one.
Yeah.
Because that's what the music, we don't music and commercials, right?
Yeah. And everything's on our website through last week.
Yeah. Okay.
So all
good.
the shows are.
Excellent.
Yeah, kind of behind, but
I have both your email questions and your deal of the week.
yes.
Oh, cool.
And we can kind of start wrapping up a little bit of. I think next show will also wrap up about 2017. But
right.
Can we make a promise to not talk about the new tax plan just for once? Not you guys. I'm talking about everybody. That's
right.
All anyone wants to talk about
I know
is the tax plan. Their tax
paying
law.
off your California taxes and all that stuff. Is there anything specific you wanted to cover besides?
I know it's boring and basic, but I thought it would be a question that we could all chime in on.
Which one?
The whether to invest in real estate or stocks.
Oh yeah, oh that's right.
Oh, yeah.
That was one of yours. Okay.
Yeah.
Oh okay.
Oh, you're talking about other specific.
Yeah. Was there anything besides that you guys wanted to cover?
I would say that's the big thing.
Okay,
to
well, we
focus
can go
on.
right into it then. All right.
New Year's resolutions, maybe financial leaders.
Do you make New Year's resolutions?
That's the question. I made.
Do you?
Okay, we'll talk about that. Yeah. Okay. All right, ready? Okay, here we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Fawn, filling in again for Mark Hoff of Pacific Private Money and Richard Davey of Fiduciary Financial Group. Our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for our 5-pack tanning certificate given away during this show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. So again, we're giving 3 different 5-packs away. So nice little price.
Nice.
Today's trivia theme is history. Now, first thing, this is the last show of 2017. So we were just talking before we got on the air about New Year's resolution. So my New Year's resolution is I will not make a New Year's resolution, and I've already broken it. So, do you guys have a New Year's resolution at all?
I haven't thought about them yet. I've got a few days still.
That's true.
So, but yeah, I usually do something.
Do something.
Yeah.
Well, you don't have to lose weight.
Well, that was actually it would have been a resolution, but I thought I'd get ahead of it because I'm gonna be 50 this year.
Holy
2018,
smokes!
So I want to
50
Congrats.
50 years old. And how old are you, Richard?
I'm 30.
30?
30.
30.
He's just a young kid. That's okay. He's on the top of the curve there. Okay, so Richard, we're going to start out with you because we got an email. It seems right up your alley. It says, I just inherited a lump sum of money. How do I know if I should invest it in real estate or stocks and bonds? And I assume there's other things to invest in potentially, but those seem to be the
Would one of
major
them
ones.
be hard money loans?
Yeah, that's true. Well, I mean, there's also gold or
Yeah. So I get this question a fair amount. Should I invest in real estate or should I invest in my portfolio, basically? And, I always start off with the basics, even before getting into that, looking at what should you do before you invest. And the basic one is just a cash reserve. It sounds silly, but, there are a lot of people that get into real estate investing and then forget about having liquidity, and then they need to come find a loan because they haven't planned well. So,
and you recommend 6 months of cash reserve?
living expenses, yeah. So if you just look at your bare bones monthly budget, say multiply that by 6, and that's what you should plan on having in cash after all of this other fun stuff happens with potentially getting a lump sum of money. So that's first step. Then we're pretty conservative. We like looking at paying off debts first. Not all debts. Mortgage debt is a good debt, you could argue. But credit cards, auto loans, student loans, things like that, absolutely should get knocked off, we think, before you just jump into investing.
Now, it's interesting. I've heard some financial counselors, they're not necessarily advisors, but they're, kind of credit counseling type people who say they don't necessarily recommend paying off the highest interest ones first. They look at the ones that require the most of a payment per
The
se.
highest dollar amount?
The highest dollar amount. Well, and it's not even necessarily Actually, in some cases, they say pay off the lowest ones first because then you get rid of them. And I don't know if it's a psychological thing or.
It is.
Yeah.
Okay, because I was gonna say, because to me, it just seems like, the higher the interest rate, is the one you want to pay off.
Right.
There's a specific radio financial personality who I won't name because I think it's this one, but they make the psychological argument that you take care of the small ones so that you get that good feeling of having a balance eliminated, even though.
Which I don't necessarily disagree with that from that end of it.
Right.
But there was something about like if ones require a larger payment.
Larger minimum.
Like a minimum payment, then that might be smart to pay those off so that you have excess cash flow for the other ones. And, I guess I could see kind of both sides of it, but anybody paying in the teens or higher of interest, it's like get out.
Get out now.
Get out, yeah. Like Arnold says in Terminator, get out. But there was the other one potential downfall with people doing a home equity line to pay off those debts is that once they get them cleared up, suddenly, boom, they start building up those credit cards again.
Yep.
And you still now have a new home mortgage.
You haven't broken the habit.
Yeah. So how do you advise people on that?
I mean, that's part of the discipline that you can get from working with a coach, if you want to call it that, a financial coach or certified financial planner.
Okay.
It helps no matter, you see professional tennis players, they're better than their coaches playing tennis, but they have a coach.
Right.
And it's for discipline primarily.
Discipline and accountability too.
Yeah.
Sometimes people hold themselves more accountable to other people than they will themselves.
And it sounds silly when you're paying for advice, you tend to follow it more.
Yeah.
If it's free, you tend not to follow it. So.
Right.
Yeah, it's the same thing with like having a workout partner.
Yeah.
Someone keeps you accountable on that.
Gotta have that self-discipline.
That's it. I don't want anyone seeing what I do, what I eat, or any of that because I don't want to be responsible to anybody. Not even to me.
So excuse me. So that's, absolutely have to knock that out first. And then this is counter to what you'll hear a lot of stock jockeys say, but I think the next step has to be a down payment on a primary residence if you don't have one already. I got to do it. Just rent increases over the course of your life are going to erode so much wealth that the primary goal of almost anyone should be own a home. I think.
I remember my economics professor told me that in 1979.
Wow.
Boy, that would have been smart advice for those who could afford it.
Yeah, it seems really tough for people, right? I mean, people renting, it always seems really hard for them to make that leap into home ownership, but rents are so high right now, it's crazy.
It is crazy. Okay, tell you what, guys, we're going to go to our first commercial break. Before we do, I want to make a quick mention here for the Mount View Hotel. They have an awesome pool. I don't know if you guys have ever been there, but it's in Calistoga, right on Lincoln Avenue, I think. So during the winter in the wineries, December 2nd through February 4th, Calistoga's annual wine passport event provides perfect, relaxed, romantic getaway during Cabernet season. Email them at relax@mountviewhotel.com or call 707-942-6877. All right, our first trivia question. History. Which university was founded as the College of New Jersey? That was its original name. All right. Call 888-912-1190. Be the first caller. You'll win that. With the correct answer, you'll win that certificate. Don't touch that dial. The best investing. We'll be right back. So just a couple of small housekeeping things. Maybe tilt this up a little tiny bit, and we'll put it a little bit closer because what I'm having to do is turn you up because when you're far away like this and you can't hear yourself, you can hear me like this, but you can't hear me like that. And the other thing is because of the sensitivity of this, whenever I used to have someone pound on it like this, and you gotta tell you, and it's like it picks it up.
So, did I hit the desk?
What were you doing? No.
Well, that's what I do is I just try to keep it. Yeah, if you can.
And then before we start the next one, can you give us the time?
Yes.
Again?
Okay, so that was 7:10. The next one is 7:28. In fact, I literally brought a towel for this one guy because I was on the sports show. That was Vern.
Oh, really?
Yeah, he be very animated. He's on Channel 5 doing all the sports stuff. So he's a really good guy.
Yeah, you have so many good athletes on your
show. You looked them up?
Yeah, well, you told me about them too.
Yeah, if you look because if you look at past guests, you can see all the guys. Brent Jones is a really nice guy.
He officiated my partner's wedding.
Did he really?
He did. He did a great job too.
Wow.
Good for him. So
Yeah.
he's now a licensed
Marriage.
efficient.
Wow. Was that in the East Bay?
It was.
Okay.
Yeah, 'cause he's
So
down in
he lives
Texas.
the East Bay, right?
Went to vineyards. I thought he lives in Texas.
He lives in Texas now. Yeah.
Yeah.
Brent Jones?
Yep.
Yeah. He lives in Texas. It's like it's his family.
Okay.
My partner's 6'2", 230, and he looked like a tiny little boy.
Oh, is
Yeah.
that? Yeah. Well, Brent's what? He's about 6'5".
He's a big guy.
Yeah.
Yeah.
Yeah. Okay. Do you want to go into your email?
Yeah, that sounds good. And I can go into the deal of the week too.
Okay, sure. All right.
Yeah, somebody's calling me while I'm trying to turn on my timer.
Oh.
No one just hang up on it. I guess I will.
I've had that before.
Okay.
Okay, you ready? Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan and Richard Davey. First trivia question is, which university was founded as the College of New Jersey?
Is it Princeton?
Yes. Very
job.
good.
It's the only school I know in New Jersey.
That's fair.
Okay. Fair enough. All right. Nam, we have an email that came in for you. It says, I am a mortgage broker, and I saw one of your presentations on private money loans this past year. I believe you mentioned borrowers needed to have 30% down payment. Is that correct?
Yeah, generally, yes. We want borrowers to have at least 30% equity when they're coming in to get a loan from us. It's just one of our sort of basic guidelines for underwriting. But, this goes into our deal of the week. In certain circumstances, we'll actually go higher, meaning, we'll go above the 70% cap that we typically will lend.
Okay. Give us an example.
So the example is we're in the process of closing a loan right now for a really large property in Southern California. The loan is for $2.8 million. The borrower is putting $300,000, a little over 300, about 320,000 in, and the property he can purchase it at 3.2 million.
So it's only a 10% down
Yeah,
payment.
10% down, but it's a lease option. So the lease option agreed upon price is 3.2. The actual market value of this property is more like 4.8 or 5.
Wow.
So
why is he getting such a good deal on it?
he got I think he's had his lease option in place for a while.
Oh, okay.
And so now he wants to exercise on it. We're looking at the properties in the surrounding area. We're comping it at almost over 5 million.
Wow. How many
So-
square feet?
Big. I don't know this.
I mean, is it personal residence?
It is.
Oh,
It's-
wow.
it's-
Okay.
Yeah, we're talking about like the Malibu area.
Gotcha.
So when you say lease option, you're talking about the option to purchase at a fixed price of 3.2 million.
Yeah.
Yeah, and if somebody's been, like maybe he did that years ago when
Yeah.
the value was only about 3 million, but he
Right.
didn't have the money or the wherewithal. Nobody would have lent him, 90% back then.
Right.
But now the property's gone up so much that now you're looking at the net equity being about
60-something
seven-
percent.
Yeah, it's like 69%. So it's a smoking deal for him. And I think it's coming to us for speed, and we're putting together the loan form right now.
In this case, I don't even know if it's just speed, because there's a lot of banks that they won't look at just the value.
Oh,
They're
right.
going to look at the actual
The
purchase
actual,
price.
yeah.
It's funny when it's the other way around, they'll look at the value.
Yeah, they always look at the lowest thing. I remember I did a refi one time on a property, and because of the nature of the property, it was business purpose. It was they gave me the appraiser came up with 3 appraisals, and sure enough, the bank took the lowest one. Because one was if I sold them individually, one was if I bundled it together. It's just all kinds of ways to do it. And there was a huge difference between the lowest and the highest.
Yeah.
I said, "Bank, could you let me on the highest?" I knew what the answer was now. Now at some point, how is he going to refinance you out? I mean, is he going to qualify for a 70% of market value at some point?
I don't know if he's planning on keeping the property.
Oh, he may just
So
flip
he may
it.
just flip the property.
Gotcha.
So-
But there's at least, it sounds like about 2 million of extra equity.
Yeah, that's it.
So the odds of him defaulting are probably small. Unless you just can't make the mortgage payment to you.
Right.
There could be some tax planning in there too, or after exercising the option, you might want to hold it for over a year. Could that be it too?
Yeah.
Yeah.
Yeah, get
Just
some capital
thought.
gain on that. Smart guy there. You must be a financial advisor.
Yeah. We'll find out if he needs one.
Yeah, really,
Yeah.
exactly. Wow, that's a pretty good deal. How long ago did you get the lease? You know,
No,
off the top of your head? No, okay.
have to talk to our underwriters about that. But
Gotcha. But
you know, the point being is in certain circumstances, then we'll we'll go above the 70%.
Yeah,
It's kind of a no-brainer in this case.
gotcha. So it's more of 70% of the value versus 70% of you guys putting down 30% specifically.
Yeah.
Yeah, that's what they call equity-based lending.
Yep.
Mhm.
Now, there's a non-deal of the week where
Okay.
somebody is trying to get a loan for a purchase in Beverly Hills that we turned down.
Okay.
25 million is what they needed. So
Uh,
there's certain limits that we won't go beyond.
what was the value of that property?
I think it was somewhere in the 30s.
Yeah,
So,
and how much down payment did they want to put?
not a lot. So, even if there was 30%, part of our underwriting is what's the exit? Do we ever want to own this property?
It could take
And
3 years to
something
So
like
sell.
yeah, some nice parties there.
Yeah.
I'm sure. Yeah. No, I know what you mean. It's like, what's the marketability
Uh-huh.
of $25 million? I mean, you gotta have that one specific
Right.
buyer. Whereas $5 million in Malibu, you can find enough people, I think.
Exactly. I mean, you always read about so-and-so sold their home, the celebrity sold their home, which was finally sold their home, and it was on the market 10 years or 5 years ago
Yeah.
for 10 million more, or whatever that number is. But the adjustments at some of these really, really ultra high-end properties are really significant.
So I think with interest rates, if they went up, that would be
That's a
really
very good point.
partially affected too.
Yeah, I
Price.
mean, most of these people, they pay all cash.
Yeah.
When it gets to, I don't know.
Silly money levels.
Silly, exactly. Well, it's funny. It reminds you, about the change in dollar amounts. I had a kind of a distant cousin, so to speak, who was negotiating large buyouts for companies, and he was representing the buyer, and it was a big genetic deal. And he pulls his client aside because it was getting kind of tense. And he says, "Stop being so cheap and add an extra 100 million to your offer." But when you're talking billions,
Yeah.
Um,
That's just a rounding error, right?
yeah, exactly. Tell you what, we're going to cut to another commercial break. We come back. I hear you got some more stuff to continue, right?
Yep.
Okay. Quick mention here also for the horn blower, which is a perfect time in the holiday season for sipping drinks and enjoying bay views with the horn blower cruises and events. Step aboard for a champagne brunch, savor the culinary creations with a festive dinner and watch the fireworks from the water on New Year's Eve gala. That's pretty cool. Visit hornblower.com for reservations. They put on a good show, I gotta say. All right, here's a trivia question. What line divided the North and South in the Civil War? That's our question, all right? Call 888-912-1190 to answer that question. If you're the first caller with the correct answer, you're going to win that 5-pack tanning certificate. Don't touch the dial. The best of investing. I'll be right back. Good. All right.
Do I have more to talk about? What's the next segment?
Next segment is 8:40.
8 minutes and 40 seconds
Yeah.
long. Okay.
And then it'll be 9:17 and then a 5:10 wrap up. Excuse me. Let's go back to you.
Okay.
Because we want to make sure, want to see, like, how do you work? Have people, give out your name and then
Cool.
and I'll have to do the same for you, as well as, any updates on the fund.
Yeah.
That sort of thing. Should have had someone in the fund last month. They did one little foreclosure
Mm-hmm.
and they sold it
Uh-huh.
and they made a profit. So the distribution, instead of it being 7.75, was 8.91%.
Nice.
For the month. No, it was going to be like that, but it's still wasn't it still paying 7.75?
Yeah, I think so. Somewhere over there. 7.5, 7.75. It was a little bit lower for November.
Oh, that's right. Yeah.
Just a little bit. Maybe it was 0.37.
Yeah, but for the
dare
year,
you.
it's still.
I
But
know.
for the year, it's still in the 8, though, isn't it?
Right.
Yeah.
And maybe we can talk about this too, but sometimes I feel like if it's under 8 or under 7.75, we're almost apologetic.
Yeah,
And
that's true.
What are 10-year treasuries paying again?
yeah, exactly.
2.4.
a lot of our investors are coming out of investments or savings that's paying, a half a point or whatever the dollar amount is. But no, we should go into these conversations with much more confidence that anything over 7% is a solid return.
Okay,
Especially when it's less correlated.
Would you mind if we got into that first?
Go for it. No. That's
okay.
good.
Okay, then we'll
I can segue. I didn't really go over with what's left over after paying debts and cash, do you invest in real estate or stocks and bonds?
Oh, right.
But we can segue into that.
Yeah, that's good.
Okay.
Good.
Start that thing.
Sure.
Okay. Here we go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Nam Pham and Richard Davey. What line divided the North and South in the Civil War?
No.
Was it the Mason-Dixon?
It was the Mason-Dixon line. The guy is 2 for 2.
I want to sit next to you for my test.
Yeah, I'm going to end the year on a strong note.
That's right.
You can take the third question.
Yeah.
Keep it at 100%.
What's my favorite color? Wrong. Bing. No, okay. So, Nam, we were just talking off air about how the Pacific Private Money Fund is doing.
Yeah, doing well. We're going to end the year just really close to 8% annualized return. For November, I think we were a hair below 7.5% return. And, we were talking about off the air, sometimes we feel apologetic to our investors when we're like, well, gosh, we only did, 7.5 or 7.75 this month. When the reason why they're coming to us is they're moving funds from their savings account where they're earning just nothing.
Yeah.
So we should be more confident that the return is a super solid return.
And I would think 2018 would be a pretty good year. We've talked about this in the past couple of months. Unfortunately, with those fires that happened in Northern California, a lot of people are going to still be either building their own house or they're going to sell to somebody else who's going to build. And sometimes the bank is just not going to lend these borrowers money because their credit score isn't enough and they didn't get enough insurance money, but they have a good down payment.
Right.
So from your standpoint, Pacific Private Money, it'll be a very conservative loan.
Right. Yeah, and we're getting a lot of questions at year end just with our investors. Hey, how are you guys doing at the end of the year? What do you see going on for 2018? And a couple different answers to that. One is we see ourselves being the same in terms of the amount of business we're going to do, if not more, because of the reconstruction that's going to go on. But in terms of the return, probably a little bit of the same, maybe a bump up, but very stable still. Certainly north of 7.5.
Are you guys anticipating any depression, and not depression, but depressed real estate prices from the tax plan affecting the attractiveness of buying real estate in California?
I think in some circumstances we may, but at the same time, other factors are going to come into play.
Mm-hmm.
So,
Still lack of inventory.
Yeah.
Right, lack of inventory, the high demand that exists, and also just the fact that there's an undersupply. And what was it? The percentage of housing stock that was lost because of the fire in the North Bay was something like 5% housing stock.
I believe it was 10,000 structures, wasn't it, that were lost?
Something like that. Yeah.
And I listened to Patty Cohen. I think it was on last week's show, and she was talking about, it's hard to predict because there's, in one sense that, the tax changes will impact you one way, but there's a trade-off and you may benefit in other ways. So until that actually rolls out and you start seeing where the impact occurs.
And then in Southern California, they lost, a fair amount of structures too.
Right.
I think there's still some fires going on.
Yeah.
Right. That's right. Until January, until sometime next week, I think the Thomas fires will be still going.
Wow. Let's see. In January, you plan on doing some events, right?
Yeah. So for our fund shareholders, please mark on your calendars. Everyone should have gotten the invite, but January 24th, we have a client appreciation dinner at Spinnaker Restaurant in Sausalito. So yeah, we had it last year. It turned out great, and great venue, great time to just celebrate the support of our investors.
But you'll be doing either webinars or events.
And we'll do webinars in probably not in January, certainly February and March, and we'll be back on the road in February.
Okay. How do people get a hold of you if they want to get on the list?
They can call us 415-883-2150, or they can go to our website, which is www.pacificprivatemoney.com.
Okay. And Richard, let's go back to you because you had a few more thoughts for us on.
Yeah, so just rounding out for someone who is looking at, do I invest in real estate or do I invest in a portfolio, a financial portfolio? Just say it really comes down to the person. They're both great long-term investments. I think over time, a diversified stock bond portfolio is going to go up. Over time, a long-term, real estate holdings is going to go up in value. Where I think the influence should lie is need for liquidity. Real estate's not a liquid investment. Profession, if you're a real estate agent or a mortgage broker, contractor, electrician, someone who can add value to the investing process of real estate on their own with their own expertise, tends to be a better investment. Someone who doesn't know how to use a wrench might be better using a stock or bond portfolio where you can still get access to real estate very, very easily and very cheaply.
Well, it's interesting. We talked about how real estate is not very liquid, and sometimes even the mortgages are not very liquid. But the thing is, you guys are looking at NOM right now. Now, Pacific Private Money is actually, you guys have launched a new website, an additional website to actually provide liquidity for loans.
Right. It's really a trust deed note sales platform. So it's called privatemoneyloans.com, and for those people who want to invest in it directly in a one single loan or a fraction of a loan, they can go to the website, and we're putting loans that are performing loans on the platform. We're still in beta, so we only put 3 on there right now. We plan to put many more going into 2018. But if you get a chance, go to privatemoneyloans.com and register, and you can see loans that have been performing loans that we want to sell. The reason why we're selling them is to create liquidity so we can fund our next deals.
Oh, and they keep a spread.
Mm-hmm.
So it actually increases the yield on the Pacific Private Money Fund because you're servicing the loan for a fee.
Mm-hmm. Right. And the yield to the investor buying the note is still a really, really strong yield.
Yeah, so it's around 7%, right?
7 to 8.5, maybe sometimes up to 9.
Well,
we may put some seconds on there, but they're all performing. At some point, we'll probably put live fundings, which means these are loans that just came into our office. We've underwritten them, we've green-lighted them. Now we're looking for the investor, but that probably won't be for several quarters.
And you'll also allow people who have existing loans to sell their loans.
Right.
Is that good? That'll be coming off pretty soon.
You mean somebody who's holding a note and they want to sell it, but they're looking for the marketplace?
Yeah,
over time. We're not ready for that yet, but
okay.
But do reach out to us, because that is something that maybe we can even do offline. I mean, maybe we can just connect them with our current investor base and charge a fee for that, but provide that audience.
It's just kind of interesting because the whole point I was bringing up about it is that you're taking an asset that ordinarily is illiquid and making it liquid.
Right. And you can see more of that. I mean, it's the opportunities for investors to park their money in alternative funds like this or alternative investments is only growing. And we're excited to finally launch it, and we'll have much more inventory.
Okay. When we come back, I want to ask Richard about some of the strategy he uses with regard to stocks and options, because he does it in actually a fairly conservative way. Kind of a close to my heart type of thing, because I used to do that many years ago. Okay, so listen, we've got a last trivia question. Before we do, I just want to make a quick mention that I wrote a couple of articles. You guys have just been on the email on it. One was how it can make sense to buy a new home before selling the old one. And the other one is why banks don't make certain loans that appear conservative. So if you want to email at edward@bestofinvesting.com, I will send you the link. It got published in Realty Times.
Oh, very cool.
Yeah, and quick mention for the realtors listening. I mean, this is something that is a really good article to have to be able to share with your buyers.
Absolutely.
Okay. Last trivia question is, what state saw the start of the American Revolution? Call 888-912-1190. Don't touch that dial. We're going to be right back.
That's for you.
I mean, I would base it on a specific party that happened. That might not be right.
Maybe yes, maybe no.
That was the catalyst, wasn't it?
I think
As Sergeant Schultz says, I know nothing. You remember Hogan's Heroes?
Nope.
Oh man, that's before your time. Go watch some episodes of Hogan's Heroes. It takes place in World War II. You know that.
Yeah.
Bob Crane's
way before your time.
I watched a lot of
65.
World War II stuff. I'm surprised.
Well, it's a
It's a
comedy.
comedy.
Okay.
Yeah,
Yeah,
it's-
series. Predates MASH, doesn't it?
Yeah.
Yeah.
Well, MASH was Korean War, wasn't
Korean War.
Yeah, but in terms of like war comedies,
Yeah.
so if you didn't never watch MASH, then probably Hogan's Heroes was even like less
Yeah.
likely to be on your radar.
Yeah, really. You ever watch MASH? Or-
it? Like an episode.
Oh, there's one. My favorite one was one called April Fools. I was just finished watching it. It's actually a really good episode. Okay, so this one is our long segment. 9:17. So I go into your.
Okay.
Because I wanted.
This is a great year to talk about it because it was not the year to do it,
Okay.
but
Okay.
but still okay.
All right. Still works. Okay, here we go. Ready? Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Manon Fon of Pacific Private Money and Richard Davey of Fiduciary Financial Group.
Got it.
Fiduciary Financial Group. I like that. Okay, third trivia question was, what state saw the start of the American Revolution?
I was guessing Massachusetts.
You are correct.
Oh, there we go.
Nice.
For the Boston Tea Party.
Yeah. That's
Yeah.
what.
Very good. Okay, so
Good job.
we teased the audience a little bit with how, when we came back, you were going to give us some tidbits about how you are producing income
Yeah.
for your clients using stocks and options together.
Yeah. So that's part of the softball I was kind of throwing up related to this deal of the week.
Okay.
'Cause that was a call option, right? I mean, what that
Well,
investor
basically,
bought
yeah.
was a call option.
Yeah.
The option to buy that piece of real estate at 3.2 million instead of 5 million what it's worth today. So something we do, it's called covered call writing. It's been done for decades and decades. You basically buy a portfolio of individual stocks. You can do this with some funds too. And you will essentially commit to selling those stocks for a period of time at a set price. So you might buy a stock at 100 and say on January 1st and say, come June 30th, until then, I'm willing to sell it for 105.
And do you ever sell ones that are already in the money?
No, I don't.
Okay.
You can.
Because you can still make a premium, but it's
That
not-
gets into really options trading when you're really just looking at the trading. More people do it, but when you're looking at it, kind of this programmatic strategy, what I tend to do is sell what are called out of the money
Out of the money.
options.
Yeah, because I mean, just for those people who don't know, because I know a little bit about this. So if you have a stock that you buy at 100,
Yep.
and you want to, if you sell the quote 105s, no one's going to exercise it today. But if the stock goes to 120, they may exercise it obviously at 105, but you've received some premium,
Some
maybe
premium.
$3, $4, $5, whatever.
Yeah.
And so my question to Richard is, what happens if you say, okay, I'm buying the stock at 100, but I'm willing to sell the 90s? Okay, so you're willing to sell it to someone for 90. They're gonna give you more than $10 today, because obviously there's $10 right there
Plus
they
the time.
plus the time.
See if
So
it gets even better.
yeah, exactly. So they may pay you like $12.
Yeah.
So it depends on the time. And I was wondering, because you can make a fairly, well, it depends on what the time frame is and how much, but you can actually make a little premium on that, and your odds of it getting called away are greater because you're more in the money. So if you wanted to get, and you can't call it a guaranteed return, because if the stock drops to 20, no one's going to exercise it. But there's more likelihood to being able to lock in a specific profit.
Yep.
But I don't know what kind of rates of return are out there nowadays on.
Yeah,
depends on-
premiums, it depends. I mean, some of these high-flying tech stocks
Yeah.
have huge premiums right now because there's so much momentum in the U.S. stock market particularly, and emerging markets, and foreign developed. Everything's just on fire right now.
Does Bitcoin have an option on it?
There's a futures market for
Is there?
Bitcoins, but I don't know about call options on Bitcoin.
Did that just launch? The futures
Yes,
market?
it did. Yeah. And I got 3 or 4 calls in a week about buying Bitcoin, which is a flashing red light when you have people inbound calling.
And so for the audience out there, we
I'm not
have
making
it.
recommendations.
No, I know, but we have someone in the studio right here who has actually made a profit on Bitcoin because you closed the circle. You actually purchased it. What'd you purchase it for?
Well, at different prices.
Okay.
Different prices, but it was when I started getting calls from people who didn't know how it worked, why it worked,
Okay.
wanting to buy it, and saying, I just got to do this. It was the fear of missing out.
Yeah.
Flash.
Interesting.
I still don't know that I would say Bitcoin's done. but you've seen this major pullback recently.
And
Just
there's like 1,300 different currencies. Now some of them don't trade like Bitcoin, but when you just see kind of everyone jumping on the bandwagon, that was kind of a signal in your case. So it's
.com era. When you add a .com to the end of a name, it's happening with blockchain now. You add blockchain to the end of a name, and all of a sudden your valuation skyrockets. So those are always scary times. But
very scary.
The covered call writing thing, just an interesting thing to close the loop is I believe in it. It's a great strategy. This was not the year for it. You made money if you were writing calls and owning stocks unless you picked really bad stocks.
Okay.
But you could have made more money. This is that type of year, a 20% S&P 500 year.
Which you would have been better off
just owning the stocks.
Own the stock. But you're lessening your risk though by doing the call option.
Yeah, so it's an interesting illustration of, no strategy is perfect. Every strategy has its shortcomings.
Yeah. The
covered call strategy's major shortcoming is when you have a banner year, you're going to typically make a little less.
Yeah. It kind of reminds me a little bit, and this is just sort of a reminder, some of these annuities where they guarantee you won't lose money, but they also top out at the rate of return you can earn, which might be, let's say, 11%, which sounds great. But if
before fees, usually.
Before, But if the stock rate goes up like 30% one year, then you're capped out at 11, and you kind of wonder over how many years would you have been better off to just take the risk, and some years will be down, and some years will be up, versus the staying within a certain time frame, or not time frame, but
interestingly enough, a lot of those annuity contracts, the carriers are using call options to build those. So behind the scenes, the way they're able to make these guarantees is that they're building out options portfolios that allow them to make these guarantees. Very smart actuaries.
Yeah, it is. Yeah, I can imagine. I gotta think that the fees are a little higher than the average bear on that one.
For an annuity contract, annuities, I've never sold one. I've always been able to. Just something that's sold under the guise of simplicity. That's the least simple thing on the planet.
Well, I guess the way it's sold is, how would you like to have an investment where you can't lose money?
But you can.
But now, how do you lose?
With some of these deferred annuities, they're built to not perform well if you live in your mid 80s, which guess what? That's life expectancy. So you've already triggered income off the policy, and maybe you've pulled out on your 100 grand investment, 80 grand, but after the fees and everything are taken out, you never actually get made whole, or you barely get made whole. And then meanwhile, the annuity carrier has been earning your money rent free for 2 decades. So they only really work out decently if you live a long time, which is what they're for. That's typically what an annuity is sold for.
Because I know that the quote salesperson, generally the sales pitch is, you can't lose money, because the insurance company, assuming the insurance company and all their reinsurance stays in force, which has been the case for many years, you won't lose money. You just may not make as much as you could if you just invested in the stock market. I think from a psychological play, though, a lot of people like that, don't they?
Guarantees are the most expensive thing in finance.
You know what? Same thing with insurance.
Yeah.
I mean, from the standpoint of when you see these things on TV, guaranteed life insurance, blah blah blah, and it's like, oh, absolutely. Because if you think about it, if you're the insurance company, if anybody just comes to you and you guarantee insurance, I mean, they could be theoretically on their deathbed, and you're going to have to pay out $100,000 policy or whatever. You're better off to go to a company that says, we're going to put you through the ringer. We want to make sure that you are really, really healthy.
Yeah.
And if you're not, then you have to pay a little bit more, because that's going to be a cheaper policy.
The only time where it can help to do guaranteed, I think, is if you're not sure if you're healthy or not, and you don't want a huge black mark on your medical insurance record. Because if you go and get underwritten and they find something, then you can't get insurance. That's on your record for all the carriers.
Yeah, that's a good point. MID, Medical Information Bureau. Yeah, no, that's true. It's a smart man over here on my
very
life.
smart.
Yeah. You know about all that stuff. It's very good. So you forgot to give out your information. How do people get a hold of you if they have questions about Bitcoin? No, I'm just kidding. No, they have questions about buying stocks,
investing, real estate, stocks, all that stuff. Number's 415-785-3778. The website's ffgwealth.com.
That's pretty easy to remember.
Yeah. Fiduciary Financial Group, FFG.
Very good.
Cool.
And by the way, Richard had a CPA license. Don't forget that.
Still do.
Oh, nice.
Still do. Okay. Don't touch that dial. The best investing. Be right back with some closing comments. Yeah, I wasn't sure. I couldn't remember if you kept it active.
Yeah, that's a pain.
I was gonna call you out for saying smarter than the average bear. Who knows what that means? Do you know what
I have
smarter?
no idea.
Smarter than the average bear.
I mean, well, yeah, Yogi Bear, right?
Yeah,
Oh, okay. I went.
but
Oh, yeah. I guess
I
I should have said it that way.
didn't even hear you say that.
Smarter than the Yogi Bear. Yay.
smarter than the average bear. It's stuck in my mind because I know where it came from. Just like the Hogan's Heroes references.
Yeah.
Sure. I love that show. That was such a fun show.
You guys seen Dunkirk yet?
No.
Yes.
Is it
I
good?
wanna see that.
It
just came
was-
out on Netflix
Oh, did it?
or Voodoo or whatever.
I mean, I'd see it on that. I saw it in the movies, and it was okay. It's probably good for Netflix because, it's like I don't know if I'd pay to go see it again.
Ooh, that's not a good review.
Yeah. Well, I mean, like I said, it was okay. It was there were some parts there that you go, wow, that's an interesting perspective on it.
Seen Star Wars twice now.
I still haven't seen it.
Took my daughter. She liked it. She's like, that was 5 stars. She's 9, so
Yeah.
to be able to see a big kids movie is a big deal for her.
Well, if you say you don't like Star Wars in Marin County, you're in danger of losing some business.
Oh, I know.
So many people work on Star Wars here.
Yeah.
Oh, yeah.
Have you seen it?
I haven't seen this one. I didn't love Rogue One, so I'm not dying.
I don't think I saw that one. I've seen The Empire Strikes Back was a good one.
Oh yeah.
Yeah, that was good. In fact, a friend of mine was he was a Jedi. Yeah, because he wasn't a bad guy. He was a good guy. George Lucas, for some reason, someone got sick or they needed somebody as an extra Jedi, and they asked, okay, has anyone had any martial arts training? And he goes, well, actually, I have, because he was more of an animator type guy. He goes, well, actually, I have, and so I guess
No way.
yeah, so
Wow.
it's kind of fun. I mean, but again, you can't really tell it's him until they.
Do the
Unfortunately, I
credits.
died.
Oh,
Not
really?
because of that, but at his funeral, they mentioned that, and then they played the video clip, and then they kind of highlighted him in yellow, so you kind of see
Oh,
him, fighting.
That's
All right, so we did the trivia questions. We did this. This is kind of a recap. Usually, this lasts 5 minutes. I mean, what do you think? I'd like to ask you, what about 2018?
Oh man.
your contact info again.
Here we go. Well, welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Fawn and Richard Davey. We didn't have a trivia question. We already asked those. So, Richard, I'm going to ask you, what do you see for 2018?
Asset prices across the board right now just are really, really high. Typically, especially in the U.S. market, you've got real estate prices. I've got a client who's a 1031 exchange consultant, and he says, people just aren't even looking at cap rates right now, which is a bad sign.
Wow, yeah.
You've got the stock market trading at a very, very high multiple of earnings. But you do have,
Like what, 15?
well, if you look at trailing earnings, it's pretty steep. Forward earnings with the tax cut finally in place, some say less than 20. Forward is an estimate, so you're looking at different estimates, but it's tough. The one market that's starting to get a little buzz, you're seeing some pickup, is commodities. Jeffrey Gundlach, who's a pretty well-known, well-respected mutual fund portfolio manager, put out a chart the other day of the S&P versus commodities and the relative valuations. And commodities are really historically cheap right now. And you could see a pickup there, especially if you see inflation really pick up assets, productive commodities, things like copper, sugar, gold. If it's good inflation, if it's real inflation, not nominal inflation, you should see productive commodities kick up. Heating oil, things like that. And they're just very relatively cheap. You can also play that with emerging markets that tend to be more commodity driven economies.
And how would someone invest in it? I mean, in the old days, they used to have commodity brokers, and these guys would charge like 33% commission.
Yeah.
So it'd be like, wait a minute, I've got to then earn 50% of my money just to break even. It's like ridiculous. What's a smart way to buy those commodities nowadays?
So there's different ways to do it. You can buy ETFs, exchange traded funds that invest in futures contracts. There's a cost to trading in futures. You can buy funds that invest in basic materials focused companies, things that invest in mining and oil procurement, things like that. Or you can invest directly in individual stocks. You can't name names specifically, but there's oil companies, there's metal companies. One of the biggest commodities projected to be used over the next decade is lithium and cobalt for batteries.
Oh.
There are funds that invest in companies that are investing in those technologies in the mining. So those are ways to get exposure.
And how, if I understand your business a little bit more, you don't charge a commission.
Zero, yeah.
Yeah. So how do you charge your clients?
It's usually an investment management fee based on the assets. So it's set up so that we make more if you make more, and we make less if you make less.
Okay, so fair enough. And Don, with the Pacific Private Money Fund, what do you think is going to happen for 2000?
We're the same. I mean, we're still getting so strong with deal flow. So we could use more capital, and we expect that to be the same going into 2018.
Okay, so if somebody invests now, their money will get deployed a lot faster.
Really fast.
Okay.
Yeah. Typically, we say 2 to 6 weeks, and that's on average. I mean, that's a pretty big range. Right now, it's closer to 2 weeks. So, we expect more of the same, more deal flow going into 2018.
Yeah, the nice thing is once someone's invested in the fund, the money is always working for them.
Exactly.
So it doesn't get pulled back out again, which is really nice.
We have loans pay off all the time, but we're also always putting new loans into the fund as well. So, as you pointed out, once you're deployed, your funds are working for you all the time.
And the average loan to value in the fund?
Right now it's about 56%.
It's still about 56%. Okay, before we cut out for thoughts for the day, Nom, give out your information one more time.
Yeah, you can go to our website, www.pacificprivatemoney.com, or you can call me at 415-883-2150.
And Richard?
415-785-3778, and the website is ffgwealth.com.
Very good. All right, here's our thoughts for the day. Wayne Dyer, I'm not even sure who that is, but I like this quote. It says, "If you believe it will work out, you'll see opportunities. If you believe it won't, you will see obstacles." Very smart. And Apoorv Dubey, I have no idea who that is, said, "Know yourself. You are unique, priceless, and a gift to this world." Now, he must have been talking about my mother because she always said I was God's gift to the world. And on that, I'm just teasing people. And on that note, tune in next week to The Best of Investing. Why? Because we're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Good. That's a wrap.
Good job.
Yeah, that was good, guys. All right, I'm going to go ahead and stop.